Preparing for the Cambridge Accounting 9706 exam is notoriously rigorous. You know it, I know it. But looking at the historical data, there is one specific topic that consistently, year after year, trips students up, and that is ledger accounts and journal entries for non-current assets. Today, we're going to look at the source material together and completely deconstruct exactly why this specific topic is so incredibly challenging. Look, rather than just reviewing basic, boring textbook summaries that you already know, we're going to explore the strategic edge required to navigate these complex questions. We're going to master time allocation, and we're going to understand exactly where the top candidates pull away from the rest of the pack in this explainer.
I want you to really look at the sheer weight of this statement. The difference between a B and an A star in accounting often comes down to how well you understand ledger accounts and journal entries for non-current assets. Wow. This insight comes directly from a Cambridge senior examiner. It completely highlights that this topic is literally the ultimate grade differentiator. It demands a massive transition from passive memorization of T accounts to the active, critical analysis of real-world business scenarios. Because, let's be honest, anyone can memorize that purchasing a non-current asset requires a debit to the asset account and a credit to the bank, right? That's your one stuff. But what happens when you're hit with a mid-year revaluation, a partial disposal, and a change in the depreciation method all at the exact same time? It's like a giant puzzle, and that is exactly where we see true mastery. So we are going to climb that cognitive marking ladder together today.
Here is our roadmap for the masterclass. First, core principles. Second, the procedural framework. Third, examiner danger zones. And finally, critical analysis and evaluation.
Act 1. The examiner's lens and command word anatomy. Okay, so when you're sitting down with a high tariff question, and by that I mean those massive 9 to 15 mark scenarios where a business might have just disposed of an entire fleet of delivery vehicles while simultaneously acquiring new property, the very first step is isolating the hidden constraints of the prompt. The examiner reports reveal a truly fascinating divide that often costs students massive points, and it comes down to two specific command words: analyze versus evaluate. If the prompt asks you to analyze a revaluation, your goal is a systematic breakdown. You need to show the exact journal entries. You are debiting the non-current asset account, you are debiting accumulated depreciation, and you are crediting the revaluation reserve. You are essentially establishing the cold, hard facts. But if the command word is evaluate, perhaps evaluating a sudden change in depreciation methods, well then the framework shifts entirely. It prioritizes analytical depth over superficial breadth. Evaluation requires identifying limitations, questioning underlying assumptions, and judging their actual effect on the final conclusions. Listen carefully. Providing an analyzed response to an evaluate question places a hard, immovable ceiling on your potential marks. You literally cap your own score before you even finish writing.
Act 2. The peer conversation and deconstruction debate.
The data shows that students usually fall into two archetypical traps when tackling these complex non-current asset scenarios. To put this into perspective, I was just in a digital study suite with two brilliant scholars, let's call them Alex and Sam, and they perfectly illustrate this divide. Alex is highly technical, a total wizard with formulas. When faced with a prompt, Alex takes the superficial breadth approach. This is where a student rapidly lists out every single journal entry, debit bank, credit disposal, debit provision for depreciation, just aiming to get the mathematical facts down on paper. It's safe, but it lacks insight. Sam, on the other hand, is our creative thinker. Sam takes the analytical depth approach. Sam might write a beautifully argued paragraph explaining the why, such as why a business actively chose to revalue an asset right before disposal and how that specifically affects the equity section. But Sam entirely misses the structural precision and the actual math required to support that argument. In their debate, Alex argues you just need the numbers to pass, while Sam argues the essay is what gets the A star. The truth? The Cambridge syllabus explicitly emphasizes that top-tier marking bands hitting assessment objectives 1, 2, and 3 require a connected understanding of both. You absolutely need the factual math, correctly formatted, acting as the foundation for a broader conceptual perspective. You can't have one without the other.
Now, before we move on, there is a massive terminology alert explicitly highlighted in the principal examiner reports that we absolutely have to address. Candidates consistently, year over year, confuse key terms in their extended written responses. For instance, throwing around the income statement term depreciation expense interchangeably with the statement of financial position term accumulated depreciation or provision for depreciation. Sounds like a minor slip-up, right? Wrong. To an examiner, this is a glaring red flag. Depreciation expense is for that specific year, while accumulated depreciation is the historic total. We absolutely have to define our terms clearly. If those terms are mixed up in your answer, it signals to the person grading your paper that there's a fundamental lack of understanding of the core accounting principles. Precise definitions absolutely must be established before you even attempt to build an extended analytical argument.
Act 3. Roadblocks and the Procedural Execution Framework.
Okay, right before we dive into exactly how to overcome the critical timing and structural roadblocks that pop up in these longer, complex questions, and before we literally solve the hardest part of this problem, I want to pause for a quick reminder. If you're finding this explainer valuable, make sure to subscribe to Ace the Exam's IGCSE ONA levels at the handle @acetheexam_IGCSE. Hitting that subscribe button and turning on all notifications ensures you will literally never miss a weekly Cambridge breakthrough strategy just like this one. All right, let's get back into it and look at exactly how to get unstuck. When you are facing a complex prompt packed with a messy jumble of dates, figures, and mid-year adjustments, timing can quickly derail your entire exam. Going back to our scholars, Alex and Sam were drafting a model response paragraph by paragraph and hit a massive roadblock regarding timing and how to actually link their paragraphs together. They were stuck. To get unstuck, the source material suggests relying on a highly standardized 5-step cognitive sequence. Think of this as your emergency protocol. Step 1, deconstruct the question. Stop calculating and identify the command word and the exact deliverables requested. Step 2, extract data. Pull only the relevant dates, costs, and residual values from the massive wall of text. Filter out the noise. Step 3, select the framework. Determine right then and there if it's a straight-line method, reducing balance, a full journal entry, or just a simple T account. Step 4, execute and verify. Do the actual math, but do it with incredibly clear working. Step 5, present correctly. Use those precise terms we literally just discussed. Applying this systematic extraction method, instead of just panicking and writing down numbers, significantly improves both your pacing and your accuracy. It's a total game changer.
And speaking of clear working, here is a fascinating insight about method marks directly from the Cambridge mark scheme. It reveals that the process is literally just as important as the final number. Let's say you're calculating partial year depreciation, and your math is just slightly off due to a silly rounding error early on in step 2. If you execute the rest of the problem with clear notation, showing the examiner exactly how you arrived at the figure that you are debiting to the disposal account, you can actually still secure top method marks for the process. Yes, even if that earlier mathematical error carried forward. Alex and Sam literally rewrote their flawed section out loud during our session, transitioning it from a mediocre, rushed answer into a flawless, full-mark response simply by heavily relying on clear, structured notation and the method mark strategy. Don't hide your work. Your process is your safety net.
Act 4. Pause and practice. A visual workshop.
Okay, let's do a quick mental workshop. I want to test your data interpretation skills right now. Consider this specific scenario. A company's non-current asset register shows an original cost of $150,000. It has an accumulated depreciation of $60,000. There is a revaluation upwards to $180,000, and then a subsequent sale of a portion of those assets for $45,000. Now notice how your instinct is to immediately grab a calculator and try to find the final profit or loss on disposal? Stop. That's the trap. The trick here is systematic chronological analysis. Step 1. You have to clear the accumulated depreciation, so you debit $60,000. Step 2, increase the asset cost. Debit $30,000 to reach that new $180,000 valuation. Step 3, credit the revaluation reserve with the balancing figure of $90,000. Processing the data chronologically like this, step by meticulous step, is exactly how top-tier candidates manage complex stimulus material under intense time pressure. It's not about being a math genius, it's about being incredibly disciplined with the procedural sequence.
Now, let's play Spot the Flaw. Looking at poorly written student answers highlights exactly what examiners are warning us against. Extracted straight from the examiner reports, the top 3 traps are crystal clear. Trap number 1, confusing cause and effect in your entries. For example, crediting the asset account instead of debiting it when a brand new machine is purchased. It sounds basic, but under pressure, it happens all the time. Trap number 2, forgetting to check your format and presentation. Let me be clear, ledger accounts without specific, accurate dates are essentially meaningless in accounting. The timeline is the whole point. Trap number 3, writing answers that entirely lack specific context. If you write a recommendation saying the business should sell the asset, but you don't actually reference the specific liquidity problems mentioned in paragraph 2 of the stimulus material, well, you are not going to earn those evaluation marks. Your analysis absolutely must be tied directly to the unique scenario provided in the exam prompt. Generic answers get generic grades.
Act 5. Strategy recap and reaching top-tier evaluation. After working through these roadblocks, Alex and Sam had a massive personal breakthrough. They realized that memorizing isolated rules is incredibly fragile. If the exam scenario changes even slightly, those rigid rules just break. But connecting concepts, actually understanding the full life cycle of a non-current asset from acquisition to depreciation to a sudden revaluation and eventual disposal, that allows you to adapt to absolutely any curveball Cambridge throws at you. To reach that top-scoring evaluative thinking, your responses must hit 3 critical higher-order assessment objectives. First, question the underlying assumptions. If a machine is assumed to last 10 years on the books, what happens if sudden technological obsolescence makes it completely useless in 5? You have to bring that up. Second, consider different perspectives. How does a massive revaluation look to an investor seeking equity versus a skeptical bank manager looking only for liquid assets? Third, and most importantly, justify your decisions with hard evidence. Never, ever make a recommendation without explicitly citing the financial data you just calculated in your ledgers.
So synthesizing this entire masterclass, there are 3 actionable core pillars designed to verify your results and absolutely maximize your marks. Pillar 1, the 3-step question scan. Always deconstruct the command word, extract the clean data, and select your framework before you write a single number on the page. Pillar 2, the paragraph balance formula. For every single technical ledger entry or factual math point you make, ensure there is a corresponding sentence explaining its conceptual impact on the overall business. Balance the math with the meaning. Pillar 3, the last 5 minutes review checklist. This is absolutely crucial. Verify your formats, double-check your dates, ensure your terminology is incredibly precise, and confirm that your final evaluative conclusion actually answers the specific question the examiner asked, not the question you wish they asked.
I want to leave you with a final, provocative thought. A highly effective way to reframe your entire exam prep is to simply stop viewing the accounting exam solely as a giant math problem where you are just blindly hunting for a single correct number. Start viewing the exam as an argument. The ledger accounts and the journal entries, those are simply the hard evidence you've gathered to prove your case to the examiner. So, moving forward, how will you use evidence-based justification in your next non-current asset past paper question? Will you just list the numbers and hope for the best, or will you build an absolutely undeniable evaluation?
Crushing these Cambridge exams requires consistent, intelligent strategy. If this explainer helped clarify the syllabus for you and gave you that strategic edge, make sure to hit that subscribe button for Ace the Exams IGCSE O and A levels at @theacetheexam_IGCSE. Turn on the notification bell so you're the first to get our future exam hacks, and drop a comment below letting us know your exact target grade. Put it out there. Keep practicing those past papers, keep aggressively questioning the assumptions in the prompts, and thank you so much for exploring this rigorous topic with us today.